Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw some volatile action in the stock market, very much a continuation of selling off through the day. The SMH and the semis really led the way in selling, but the spiders remained strong, pushing up, maintaining a flat day. The Qs took a hit ever so slightly, but cracks again are starting to emerge in the charts. We have big flyers, AVGO, Netflix pulling down on the charts, but really the semis lead the way. So let's take a look at the data and see what the charts are telling us today. So right into the data or the market summary board, the Dow Jones is up 0.31%, Nasdaq's down 0.23%, S&P 500, as I mentioned, flat basically on the day. U.S. oil retreating slightly, down 0.38%, gold popping up 1%, and Bitcoin popping right back up, getting very close to that $120,000 mark, up 1.54%. So what does this take us in the charts? As we can see here, all of these stocks here on the board, big players here, NVIDIA down 2.44%, AVGO down 3.28%. We have Microsoft down ever so slightly, Meta down 1.21%, Oracle and Netflix that I highlighted on down, Palantir also down. That's an unusual day in the markets. We still do have a lot of green, a lot of health companies in the green. Consumer durables, we're doing okay. Coke came out with earnings, and we did see some retreating there on Coke today off of those earnings. But also notice here, Philip Morris, we're going to take a look at that chart a little bit later, down 8.08% on the day. So into the spiders and SPX we go, and we see here that yesterday we did have a topping tail created on the chart. But look, you almost have to zoom in. It's awfully tiny, very small. These aren't the most strong signals on the chart. Topping tails alone are very strong, but we want to see a bigger topping tail to really signify that this is the near-term top on the charts. All the while, it's still a topping tail, so I will respect it as such. The high of that topping tail is at 6,336. If we do close above that, this topping tail is wiped off the charts. Ultimately, though, with a topping tail, that would imply downside momentum. First area support, and it's going to be very minor. It's going to be strung out along this trend line, right around 62.52. If we go down further, right around 6,000 is really going to be the first solid support on the S&P 500. Next up, Qs. As we highlighted the other day, these two trend lines are really pinching price over the last 4 trading days. We even started selling off further today, but rapidly recovered and pushed right back up right here in this consolidation. We did not get a topping tail here on the Qs. And so really this chart is not as vulnerable as the S&P 500. And really, let's go back to the S&P 500 just for a minute, just to look at the intraday price action. All right. So we started the day with a slight gap up, but then hit a really hard selling pressure right here, and then came up, bull flagged, and then started pushing higher on the day. Ultimately, yesterday and today is really kind of washed itself out in the general market. As you see here, it's almost like a yin and yang of what's been going on the last couple of days. Ultimately, though, this price action created that topping tail, one that I'm highlighting and certainly watching like a hawk on the days moving forward. Another index that had a topping tail right here on the chart is SMH. Now, this one paints a little bit different of a picture. The semis lead the way, folks. And what do I mean by that? That means that usually wherever the semis are going, if they're starting to fall off the chart, that means that price action likely for the general markets are about to start selling too. Now, if the semis start ripping and going higher, then the rest of the market likely starts following it as well. So it's important to pay attention to the SMH to understand and predict short-term where the rest of the markets are going to go. All right, so back into this chart, we notice here when price broke above, we'd never confirmed into this parallel, right? We never had a close above this candle here on July 15th. And since then, we fought to stay in the parallel. Then yesterday had that topping tail. And then today, selling pressure continued pushing price down. Since we've got a topping tail on the chart, that should dictate and also provide price action moving forward, the likelihood of price action going down. The topping tails typically push price down and keep price lower than that topping tail. A great example for that is on gold. Gold's just shown resilience, staying up very near the topping tail, but it has not yet eclipsed the topping tail. And we'll show you that chart in just a few minutes. IWM is staying much stronger than the rest of the other indices that we've already covered. Look, we're up 0.82% on the day, consolidating right here amongst this declining trend line. As if you recall yesterday, if you flip over to the weekly chart, what does this look like? It looks like bullish consolidation, folks. So right now, the chart looks good for IWM. A lot of small cap stocks were actually popping today and moving up higher in the charts when we had selling pressure for the rest of the general market. Into Bitcoin we go. Bitcoin still has the daily topping tail here in effect. And as we see here with price, what happens after a topping tail? Price usually comes down. Now, notice though the size of that topping tail when comparing it to the spiders or in the SMH. That's a solid, big, long wick, and it's an awesome candlestick for a topping tail. Clearly visible on the chart, highlighting to everybody, watch out. This area should have a lot of sellers. Now, obviously, trend lines get broken, areas of support get broken, or resistance get broken. This too can fail, but we need to have price go back above this topping tail and close up there. That will negate that topping tail. Until that's done, this is now controlling price action moving forward on the charts. And also, too, notice what happened. Weekly topping tail. So not only do we have a daily topping tail on Bitcoin, we got a weekly topping tail on Bitcoin. The same thing that's going on here on gold. We've got a gold topping tail here, and then we've also got a weekly topping tail. Now, notice the strong momentum in gold. Now, this typically happens during Mercury retrograde timeframes, which we're currently experiencing right now. Usually, you do have an attraction for investors getting into gold because there's just a lot of uncertainty that develops during this time with communication issues and technology issues. Folks then divert their attention and start investing into gold. Well, gold's starting to break out of this declining trend line that we see here on the chart. Very nice move for gold. We'll see if we have a confirming move tomorrow or in the following days. That would then signify next stop is going to be the topping tail here at 3,500 on gold. Great move on gold today. Also, great move on silver. Look at this. We're about to eclipse this topping tail. Again, guys, I've been talking about silver for quite a while. The momentum behind this silver play is really incredible. You can see it right here on the chart. Look at this move all the way down here from $28, $11 higher now on the charts. Impressive move for silver, an incredible 30% run on that chart. Wow. Give it to silver. Congratulations. Way to go. Next up, we've got U.S. oil. U.S. oil continues to trade amongst this bearish consolidation. The likelihood for price still is pointing towards the downside, down to this declining trend line right about $60.44. Next up, we got Nat Gas. Now, Nat Gas did continue selling today, but not as hard as it did yesterday. Notice we caught support right before this trend line. So we'll see if we consolidate near this trend line. That tells me we're likely going lower. The 313 area followed by $3 will be the areas of support that I'm watching here on Nat Gas. Next up, the 10-year yield. Now, this could be a reason why the rest of the markets are not selling harder. You notice we've retreated very nicely off of this trend line area and also negated this inverse head and shoulders pattern, but we're not out of the woods yet, folks. Look what's occurring and forming here on this chart. We actually have a broader, larger inverse head and shoulders pattern forming on the chart. We just don't have the right shoulder yet. If we do have price action, or at least the price on the 10-year yield come down a little bit further and then curl back up, this would be a much larger inverse head and shoulders pattern. We'll watch this closely over the coming days to see if that does change and develop to point towards more upside on the 10-year yield. Next up, AVGO. All right, I was talking about cracks in the glass, cracks in the ice in the market. And you see here right now, beautiful reversal candle here on AVGO. It didn't open up above, so it's not completely an engulfing reversal candle. However, look, it just negated the previous 4 days of trading all in one day. That's what happens when you have moves to the downside. All right, so this doesn't mean turn on the selling pressure. We've got to short the whole AVGO chart. That doesn't quite mean that yet, because look, not too far away, we had a very similar chart candle appear right here on AVGO's daily time frame. We had a big red sell candle, and it took 2 days for us to fight to get out of it. So we're going to be watching very closely. Do we continue selling tomorrow and break this inclining parallel? That's the area to watch, the line in the sand, if you will. And if we have a confirming move back into this parallel, well, then selling likely will resume with the first major area of support right here around $250 on AVGO. Next up, into some earnings plays. Now, we had DHI report earnings today. As you can see here with this green symbol, they had a double beat on EPS and revenue, and the stock resulted with a big, huge push higher on the day. Very nice gain of 16.98%. If you look at the 10-minute chart, there really wasn't too much pullback that occurred here either. It's just a gradual float up here on the stock. Incredible move. Not a lot of sellers are willing to pull the plug there on DHI. So where's it going? Next areas of resistance I'm paying attention to are right here at 155 and 14 cents, as well as 165.70. If we get a confirming move above this trend line tomorrow with a close above this candle, any pullbacks down to this trend line currently around 145.68 will be buying opportunities for DHI to continue this breakout. Beautiful move from this low pivot that we had here in April and a nice explosion gap, and river theory move higher on the charts. Those of you that are tuned into the methodology and the technical analysis that we teach, what a beautiful river theory play this is. Gap above the support or resistance, and then an accelerated move up higher. Beautiful, beautiful display here on the charts. Next up, IQV also reported earnings today. You see here, double beat, earnings per share, and also revenue beat. And we did excel through breaking out of this declining trend line. I'll pull back further on the charts. You can see this is a longer term trend line coming back from August and September of 2024. Decent break above. What I like about this break too, it didn't really break all the way up here, making it very difficult for a confirming move the following trading days. It just poked above, giving a really good chance for a confirming move tomorrow or in the subsequent trading days. Watch this closely. If we do confirm, it's a buying opportunity with next stop at 193.67, followed by 207.60 on the charts. Next up, LMT, Lockheed Martin came out with earnings also today. You can see this morning they actually missed on EPS and also on revenue. You see here on the charts, we did fall straight down 10.81%, blew through this recent double bottom area, which would have been a triple bottom, and then continued selling through the rest of the day. Now currently trading, actually closed the day at 410, trading up a little bit after hours at $412. If the selling pressure continues, notice we've got a gap fill right over here at 402.42, and this $400 psychological number should provide decent support here on Lockheed Martin. If that gets pierced, the next support area is down here at 388.14. Any sort of bounce will immediately take price up right here to this declining trend line. And if it beats that, then we can have a lot of room to run on Lockheed Martin up here into the 440 range before you run into further resistance. Next up, GM. GM came out today. As you see here, they did actually beat on both earnings per share and revenue, yet the stock sold off 8.12%. And the reason for that, this company is now taking a $1.1 billion hit from tariffs. A lot of the parts for these cars are made outside of the United States, and getting those parts shipped into the United States, even though this is a US car manufacturer, those parts are all being tariffed. So they have had to, as I said, they've eaten these tariffs. What this is doing, folks, is that's reducing margins, and it's also cutting guidance for a lot of these companies, something that I did provide a thesis for going into this earnings, especially if a lot of companies are going to try to absorb the cost of tariffs and not pass those down to the consumer, and to allow the consumer to still remain in the buyer's zone, right? If these prices start going up a lot, that could turn off consumers, which obviously would hurt sales for these companies. So at least for GM, they've decided to absorb some of the tariffs for now, and they're taking a hit right here on their chart because of that. First support, though, on GM is 47.95, followed up by 46.45. If you notice, anytime you have a break of a major trend line like this, what normally happens is we pierce, go down a little bit, hit support, then reverse back up and hit this trend line. If we tag the support, then ultimately come back up, that would be a selling area, as this would be resistance on the chart of GM. Next up, we've got Philip Morris. Now, Philip Morris also did come out with earnings today. You see here a mixed bag, beat on earnings per share, but they missed on revenue. And part of the decline that we see happening today, down 8.43%, was because their cigarette volume as well as their Zyn pouch volume sales have been decreasing. They weren't up to expectations. And so investors obviously don't like that and hit the big sell button today. Big gap down, river theory in the opposite direction. Notice we've had this long-term trend line here on Philip Morris, and price action excelled above it, confirmed above it, even retraced back down to this trend line right here and excelled up higher, came back down, bounced again, following this inclining trend line with pivot support right here, as well as right here. That held price for the time frame. However, the earnings report couldn't keep it up any longer, and price accelerated downward today. That's making me target these two support areas. If those do get beat, say if we do have a larger sell-off in the market, it's always important to know where you could be wrong. These are the first major supports where Philip Morris could get a bounce and reattack this inclining trend line. However, you have to understand you could be wrong. The selling pressure and euphoria on both sides, buying and selling, can increase beyond expectations. So this is a long-term, beautiful trend line, only been tagged twice. That tells me that should price come down into this trend line and this pivot low, so you can make it on your chart, is on April 15th of 2024, connected to the pivot low in January 14th, 2025. Anytime price hits this area currently right around $142, if we come down at an angle, this area will be substantial, solid support for a bounce play on Philip Morris. So there you go. You got a game plan there if you're interested in trading that stock. All right, guys, that wraps up Trading the Close. Thank you guys so much for tuning in and watching today. Please don't forget to hit the like and subscribe button, and always keep it technical, and I'll see you on the charts next time. All right, take care.
Hey guys, Lawton here with Verified Investing, and I am so excited to announce our brand new partnership with Kinesis. Kinesis is a revolutionary concept. They're able to create cryptocurrency that's tied directly to gold and silver in the form of KAU and KAG. You can send in your gold or silver and convert that directly into tradable currency. Another thing you can do is buy their gold. You can convert your US dollars or whatever currency you want into KAU and KAG. You can withdraw that and actually receive physical gold and physical silver. This is absolutely revolutionary. We know with how volatile everything is, it's important to have things grounded in silver and gold, and Kinesis is a great way to do that without the risk of having to go out and buy gold and silver bars yourself. They also have a trading platform directly linked with TradingView that I advise you all to check out. Thank you so much to Kinesis for sponsoring Verified Investing.